Hi guys, welcome to SMSF Mate's podcast today. Before we get started, let me start off with the general advice warning. We are required to warn you that any advice has been prepared without taking into account your objectives, financial situations or needs, and because of that you should, before acting on the advice, consider the appropriateness of the advice and have regard for your own objectives, financial services and needs. And where the advice relates to an acquisition or possible acquisition of a particular financial product, you should obtain product disclosure statements or a PDS relating to the product and consider the PDS before making any decision about whether you should acquire that product.
Welcome to SMSF Mate's podcast. This week we are joined with Rob Joseph from My SMSF Property.com.au, and Rob is here to talk to us about all things gold, I think. Is that sound right?
Hi guys, how are you?
Yeah, good. Nice to meet you, Rob.
Thank you. Likewise.
And so to get started, Rob, maybe you could just give us a quick little, intro. Who are you? What's your interest in gold? Why did you like to do this for our listeners? That'd be great.
Yeah, no problems at all. So guys, I've been in the SMSF space, in the administration space for over 13 years. Our existing clients have a lot of gold exposure, and gold's a great, asset class to hold in uncertain times. So I think that's a good lead in. But effectively, we've been managing people's SMSFs where they've got small and larger portions of gold, and hence that experience. And hopefully, we can impart that to your listeners.
Excellent.
What type of investments can you have in gold?
You can start off with something I guess the most we're familiar with, which is a exchange traded fund called an ETF. So there are a couple of prominent funds that have been running for several years, about a decade and a half, and that's an easy way to get exposure, where you can buy it through a direct platform. Other ways are there's gold coins and gold bullion, which you go through a gold dealer, several around the country, and or vault providers where you buy bullion, that exposure. There's also new derivative kind of gold exposures, which are crypto-backed and gold and so forth. So there's a variety of exposures you can get access to depending on your level of understanding, knowledge and experience, and fundamentally what kind of asset gold exposure you want to hold in your SMSF.
Rob, I might hone in on your crypto-backed comment there. Maybe you could explain that a bit more. That sounds quite an interesting concept.
Yeah, absolutely. So there are providers that have launched silver and gold backed crypto NFT collection.
Non-fungible tokens.
That's exactly it. Non-fungible token with the equivalent amount of gold and silver redeemable on the face value of. So obviously the gold tradable is there's the spot market for the NFT itself, and then the intrinsic value, which is derived from the equivalent amount of gold and silver attached to the NFT. So that's quite innovative and interesting. We've seen a few people within our constituency basis pick those up, but the most common is gold bullion, from a reputable gold provider.
Good old-fashioned ounce of gold.
That's it, yeah. The gold bars. We see, to a lesser extent, gold coins, which are treated like a collectible. It gets very tricky in an SMSF, but the majority, more than 70 to 80% of the exposure we see is bullion, normally held in a vault through an independent provider.
So how do you get through the compliance with the physical bullion?
Yeah, good question. Well, fundamentally, the super laws have allowed collectibles for a number of years. So
wine, for example, gold. Yeah, I see.
Yeah, that's where it gets tricky. So gold is not, as long as what we've always emphasised from a cost point of view and a compliance point of view, is ensuring that clients and members have effectively used a third-party provider to manage, whether it be wine, gold, particularly gold, and thereby that reduces our risk. Because if you're holding gold, to give you an example, if you're holding gold in a home, you've got some serious issues there. You're going to have to get insurance for it, and you're going to have to go and get that valued independently, which is going to be costly. And it always falls, under the eye of the auditor. Gets pretty concerned about that. We've got nobody of that ilk in our database as such. So most people hold it in a vault where it's independent, it's insured, and it's valued for free each year for the clients, or they pay a nominal fee because the vault values the assets every quarter.
So where are these vaults and how do they work?
There are vaults in every state. Some states have several providers, 2 or 3. In Sydney and Melbourne, there are about 3 or 4 different providers. In WA, there's at least 1 provider. There are some small independents, so you want to do your due diligence. But the big guys, without naming names, you can Google them and you'll find them. You type in gold vault provider. But yeah.
Okay. And I suppose from a, I suppose when I hear gold, I think no yield, no income. Like, is it purely defensive? Is that the view, or is there something I'm missing?
Yeah, good question.
Growth kind of thing.
Yeah.
Yeah, look, I think the key reason people put gold in a portfolio is due to uncertain times, like we're experiencing now. So when there's uncertainty, high inflation, there is always a run to safety assets, gold, and obviously lately in the last 10, 13 years, we've seen a lot of running into Bitcoin. Uncorrelated assets, they're called as well. They're not linked to conventional assets. So in the event of a downturn, you'd expect those assets to appreciate and protect your portfolio. So that's one of the key reasons people are putting in.
Yeah, and from my understanding of particularly gold bullion bars, is
yes.
they're somewhat similar to property. If you have a reasonable size bar, let's say it's $50,000 valuation, and you want to draw down say $10,000 of that, how do you go about doing that with gold?
So you would go to the vault provider or to the initial seller and sell back to them. That's what they typically do. That equivalent portion, if it's bars or if it's that can be done.
Yeah, so I let's say my bar is 50,000. I would sell the bar back to the provider. They would give me 50,000, and then I could reinvest 35,000, let's say, into a smaller portion of gold.
That's correct. Right. That's right. Yeah. So because it's a lumpy asset, gold, you'd typically go to the seller, to the provider, the gold seller, and they're the first point of call. And they've got obviously a market which they avail you off.
Take a fee obviously, and the alternative is use an ETF where you can sell smaller portions, I guess.
Absolutely, ETFs are good exposures. There's been one in the market, without naming names, for a number of years. It's been quite solid, and it's performed well. It's a simple exposure, easy exposure. Most people have a stockbroking account these days on their an SMSF, and it makes it easy to acquire.
And from a risk adverse point of view, I've heard in the past that having a ETF is kind of treated, like paper money, let's say, versus a physical piece of gold I can put my hands on. Are the ETFs generally convertible into a physical gold, or are they effectively a paper contract?
Yeah, they are not convertible. They are paper, as you say. And it's hard to ascertain if you read their reports whether it's a fully equivalent asset backed.
Right.
Yeah, so it's a synthetic.
Yeah, interesting.
It trades on the spot of the gold price, and you'd have to quantify the financial reporting to work out whether the actual fund holds the equivalent amount of gold. Typically, in most cases, from what I've seen, they don't.
Right, versus owning my gold bar that is stored at 123 ABC Street somewhere in Sydney. I could, in theory, walk in and take my gold bar home.
That's exactly it. So the one thing we stress is that using independent storage providers, without touching on getting into controversial subjects, but I think most listeners can understand the importance of independence. From larger institutions, shall we say?
Right. And are there any tax or implications? I'm looking at Ashwin here. He's the accountant. About buying and selling gold. Are there any limitations from an SMSF point of view?
I would say it's like any other asset class. You have your capital gains event on that, and depending on where the fund is, you'll have tax consequences on there. So if it's in retirement phase, likely to be zero.
That's right, exactly, Ashwin. I mean, basically, it's like a property. You trigger CGT when you sell if there's a profit.
Yep.
If you sell and there's no profit, which is rare with gold, as we've seen in the last 30 odd years, then, there'd be no tax payable, but it's a lumpy asset, it's a CGT asset, so yeah.
And so, Rob, maybe you could sort of explain a bit more detail around sort of the compliance and reporting requirements, I guess, for SMSFers if they're holding gold.
Absolutely. So once you acquire the gold, listeners, effectively most SMSF administration providers or accountants will require you to have the initial purchase receipt. Shows us the price you paid, the quantity of gold, and that's provided by the provider, the seller. Each year we need an annual valuation of the gold. Now, most people can get that off the spot pricing sites, but most of the independent vault holders will provide a report. Some are free as part of your monthly fee, and others are effectively will charge a small nominal fee for that valuation, which they do internally. The third thing is that if you're holding gold, as we mentioned before, in a home safe, you need insurance. That's negated because most of the independent vault providers are insured. So they're the three things really. And of course, the fourth is if you've disposed of some gold, we'll need a transaction report or an update on what you've bought and sold.
Right. And so the insurance one's an interesting point. So being an SMSF trustee, let's say I have $100,000 in gold sitting in my home safe. Is the insurance for my general home and contents suitable, or is it a specific type of insurance because it's an SMSF?
It's definitely specific insurance that's required, which is specific to the gold holding, which makes it expensive. So that's why we look at it as a deterrent. Not that we have any members or clients with SMSF in a home safe.
From your 13 years of experience, there must be some stories where people have done this wrong, and what tips could you give our listeners if they decide to go down this pathway?
Absolutely. Look, in the early days, we came across quite a few independent holdings in private homes, which weren't insured and, which weren't valued. So, again, they're serious breaches of the super laws. And what we basically managed the situation by talking to the clients and urging them to get the holdings moved across and into a vault, an independent vault provider. And it reduces their costs as well, of course, as mentioned many times. And that ensures compliance. So, and then the insurance requirement is negated as well. So, I think in the good old days of when SMSF has been around since, the late 80s, early 90s. So, effectively, there are some old practices we've seen in our early days of inception for the business. And we were able to manage that by helping people and, providing some guidance on suitable solutions.
Yeah, so I just want to dig into this a bit more because it's an interesting concept.
Sure.
So if I had a investment company, PTY Ltd, nothing to do with a self-managed super fund, and I had a gold investment that was stored at my home, would insurance be required?
In personal terms, what the breadth of what you can do is far simpler in terms of you can have it. Yeah,
so
absolutely.
So your point about insurance is specifically to do with SMSF rules.
That's correct. Absolutely. Yeah.
That's a great
for the context of the conversation, we're really focusing on SMSF's buying gold, which is quite, obviously gaining a lot of momentum given the current market conditions.
Yeah.
You piqued my interest with buying bullion, physical gold in an SMSF. How would I go about doing that? And are there any limits or, restrictions that I need to, read up on?
Yep, great question, Gav. So effectively what you need to look at is, finding a local or a national bullion dealer. You can go into their premises, they'll have a shop front, and then negotiate the pricing, discuss that, and then, exchange for your gold bullion. Basically, the key there is looking at whether they offer storage.
Right. Because
as we've discussed a couple of times, storing in your home is just it's high risk and not really acceptable in 2023.
Understood.
The ATO and auditors don't like it, and it's added as a fair deal of risk. So go to a bullion dealer that does, and most of them do. They do the storage, they sell you the bullion, and you negotiate the pricing. The pricing is the spot pricing, or they might be a little high depending on the provider. You can acquire the asset through your super fund by paying by electronic transfer. Typically what they'll do, and most providers will sit you down and verify the fund. They'll do a KYC, know your client. they'll establish who the purchaser is, which is the self-managed super fund. They'll have the name, ABN of the fund. There's a corporate trustee, those details. And they'll, in some instances, ask for the tax file number of the fund so they can report that data back to the ATO.
Yeah.
And once you've done that, you'll negotiate a price, you'll purchase. And typically, in most scenarios, the provider will hold the gold for the SMSF client in their vault. They'll provide a monthly, quarterly, biannual, or annual statement, and the SMSF members are free to visit anytime. Most of those vaults are open 24/7.
Okay.
Some are 7 days limited. Yeah, from
right.
So
10 to 6.
Is the experience like you go into the vault and you show an ID and you can actually see your holding? Is that sort of what you're alluding to there?
Absolutely. So to buy, you'd be going in as an SMSF member, and then they verify you and complete a very detailed form, and then you go through the acquisition process. No different to acquiring any asset, really. There's the spot price, obviously, which is online.
Yep.
And then effectively, you'd exercise your decision there. And then the reporting, from a reporting point of view, again, is pretty straightforward. It's really the purchase receipt, the annual valuation, which the vault providers normally provide. And then we've got basically just a movements report, which would show if you bought and sold any gold.
Right. So if I did want to go into a bullion dealer and buy some gold on behalf of my SMSF, can I buy $1 million, $10,000? What are the sort of limits and amounts you can buy?
Yeah, great question, Gareth. The limit is set by the seller, by the gold bullion dealer. So as we understand, recently there's been high demand, and some, not all, bullion dealers are limiting what they can sell to SMSFs and even to individuals.
Right, and the gold is set as a floating price, so there isn't such a thing as a reselling at a higher margin based on certain volumes, right? They're somewhat required to sell at the floating rate or similar to the floating rate.
Again, another good question. Typically, the spot rate is what is sold for, but some providers charge a bit extra. So you'd have to go and negotiate and have a look at their pricing. But most of the providers have got online websites these days, so you can have a look at go to somewhere like Kitco, which is a worldwide gold site, and it's an index. You can see the price, and then you can compare that to your local bullion dealer.
Right, but in theory, there's no bulk buy discount if you're in the queue and you want $1 million worth of gold. And
I think that's the benefit of going to a bullion dealer in Australia, because you certainly could avail yourself of a discount. That'd be negotiated, including the price. That's all subject to the individual bullion dealers.
Right. Okay. Yeah. That's interesting. Good to know.
Yeah. I mean, from our point of view, what we see really, we understand the process, but what we see are the receipts that come in, and we see the movements, but not really that au fait on terms of how they negotiate the process. But fundamentally, it's as described. Yeah, you would get some leeway, but given the current market situation where there's high demand for gold, particularly bullion,
and gold has reached an all-time high recently, didn't it?
Yes, it has. Yeah, That's right. So effectively, it'd be tricky to negotiate. I think supply is the issue. I think for most of the bullion dealers, securing supply. Yeah.
And Rob, what about silver? The silver seems to be the forgotten cousin of gold. But if I remember my readings on the monetary system, I think it started off in silver, didn't it?
Look, silver's, I guess it's a great asset as well from a value point of view, but it's also used in a lot of componentry, computers and phones and gadgets and so forth. It's cheaper and it's great for plating. So it has a high value, and there are people certainly within a client base that are buying silver. It's not as popular as gold because it's always seen as a store of value asset. But silver, yeah, definitely. There's definite interest in silver as well, and other metals as well.
Okay, great.
Yeah.
Thanks a lot, Rob. It's been really informative. This is an area I'm not really familiar with, so I've really enjoyed today's session and learning more about gold and the different options and how silver also is part of that process and understanding the administration that we need to take into account if we do go down this process as part of our investment strategy.
Absolutely. I think some professional firms may find some of this pretty interesting as well.
Absolutely correct. So as soon as you acquire a new asset in your super fund, you need to update the investment strategy. Ideally, best case is that you even minute what you undertook. So if you've got a fund of 1 to 4 members, you can have now 1 to 6 members in a self-managed super fund. You want to be minting that decision, because bear in mind, you need to ensure that all members of the fund are happy with the acquisition of bullion, gold bullion, silver bullion for the fund.
Yes. Yep.
All right, Rob, that was really informative. Great. Thank you for coming on the SMSF Mate podcast. Just a courtesy little plug, if you want to do a little elevator pitch for our listeners, feel free.
Thank you, guys. Thank you, Gareth. We help us SMSF clients that have got anything from gold, Bitcoin, property, any asset really. Been running for 13 years, and we're online with very cost effective. We started about $1,100 for a basic fund, and we've been at it for a while. So have a look at us. We're online at www.mysmsfproperty.com.au. Reach out if we're of interest to you.
Excellent. And of course, as usual, if you like the podcast, feel free to like and share. And if you would like to be in Rob's shoes and get asked lots of silly questions, feel free to get in touch with us at hello@smsfmate.com.au, and enjoy your day.
Thanks a lot, Rob.
Thank you, guys.
Cheers, Rob.
Cheers.
Thank you for joining us once again. If you're interested in our waffle about self-managed super funds, feel free to join us on smsfmate.com.au or search SMSF Mate in Spotify.